Welcome to the Coverage and Coffee podcast. My name is Casper Harsey. Joining me is Mo Mirzan. And today we got some news. It's actually relevant. I have a little anecdote to start us off with. But I have a friend who sells earthquake insurance.
Oh yeah.
His business his business is on shaky ground.
Oh my god, that's awful.
I mean, on that note, we will be continuing a little bit from where we left off last time. So, if you didn't join us last time, I shared an anecdote at the end about the difference between earth movement and earthquake insurance, and I posed a question. I don't remember the question. I probably should have searched or rewatched that part before we started filming. But something about whether it's covered by earth movement or earthquake, and I kind of hinted towards the fact that we would answer this, but can you guess the answer, Mo?
This was about landslides, right?
Yeah, earth movement or earthquake.
Covered under earth movement.
Yeah, it depends on your wording.
Okay.
I don't actually. We can't give explicit insurance advice on something like this. I realized that after we wrapped up last time that I don't actually have an explicit answer, but not that anyone actually dropped a thought in the comments, but I did say, if you had an idea, you could drop something on the LinkedIn. I don't actually have the answer for you, ladies and gentlemen.
Yeah, I mean, thanks for the intro, Casper. But to kind of summarize that quick intro, we will be talking about natural catastrophe coverage and sort of natural disaster insurance and how that comes into play in terms of the policies that do provide insurance all over the world.
Yeah, and I think we're going to dive into a couple different examples of this, like from around the world. Not necessarily specific events, because once you start getting into specific events, there's a lot that's going on. We may do deep dives on specific events in the future. But we're going to look at the role that natural catastrophe insurance plays, the role of the weather. I mean, the whole, this isn't going to be necessarily climate change related today, but it is obviously that common thread when we're talking about an ever-changing natural catastrophe environment, when we're talking about a couple spoilers, when we're talking about rain and flooding, when we're talking about wildfires, we're talking about earthquakes like we did last time. And I think we're going to start off with Japan, which I think in a very global sense has been in the news a lot when it comes to natural catastrophe.
Yeah, I think historically Japan has sort of experienced more than its fair share in terms of natural catastrophes, largely because of just where it's situated in terms of how close it is to that ring of fire, the Pacific Ring of Fire. And so, things like tsunamis, earthquakes, these things occur relatively more often than other parts of the world.
Yeah. Yeah, and I think, like, before we dive in any further, I will quickly talk about there's three general overarching types of natural catastrophe insurance you can get. You can get the earthquake, earth movement, like we talked about last time. You can get something known as windstorm is typically the normal one. That's, typhoons, that's wind damage, that's those videos you see on YouTube of people's trampolines getting flung into the air. And then flooding, of course. And sometimes there are smaller subsections of that. You'll see sewage backup sometimes that's related to flooding, right? If flooding goes into the pipelines and it ends up backing up, that's a completely different type of damage that ends up occurring in terms of everything got wet and everything got gross and sticky, to put it a different way. But in Japan, we actually we before the whole nat catastrophe conversation in insurance really got big in the US, we've seen all three types of these in Japan, right? We see the flooding from the tsunamis, we see the windstorms from the typhoons, and we see the earthquake and the damages that kind of connect to there. What has been really interesting about Japan's model, and this is probably a topic for a later discussion, is the role of governments in this. Can you kind of dive into that a little bit? I know you did a little digging on that.
Yeah, absolutely. So because of how often these events do occur in Japan, the Japanese government, the Ministry of Finance more specifically, has entered into a scheme to provide everyone with sort of a national earthquake insurance. And so what this means is that, for total losses related to property and buildings and so on and so forth, you are in fact covered by this scheme. So Japan's able to make use of sort of bundling together the entire population of Japan, and therefore, at least in theory, achieving somewhat discounted rates on the entirety of the country.
Do we know? And perhaps you can search this while I ask. But do we know whether this is individuals need to buy, like, they're, because I know they're mandated to get earthquake insurance, right? That's a mandatory requirement. But is that something that the government automatically assigns them, through the registering of their property through taxes, or is this something that they mandate everyone needs to buy it, and then they provide capacity to insurance companies to sell it, and then it's cheaper because the government is providing the capacity, so the people still get the benefits of it, because as we can see in some other places around the world, we'll touch on that, prices are getting way too high without government intervention. Yeah.
Yeah, so I have the outline of Japan's earthquake insurance in front of me here. So the earthquake insurance is an insurance exclusively for earthquake disasters. It indemnifies against damage caused by fire, destruction, burying or washing away, resulting from an earthquake or volcanic eruption, or from a tsunami as well, following either of these events. So it covers buildings for residential use and household goods. And I believe it's a scheme in which both the public and private sector pay into.
Yeah. I mean, I think that probably is the best model, is some sort of like combined government backed, but also with that private capacity, because I think that, at the end of the day, companies and people do need to be able to decide how do they want to handle their risks. But also at the end of the day, if we're talking about a country like Japan where earthquakes and flooding are more prevalent, it will get to a point where the private market just cannot like kind of price into it, right? So that's something that we kind of need to consider when we're talking about these things. And I think that's actually a fantastic segue to the next thing that I kind of found, which was Italy. As of last year, they passed a budgetary law that also requires natural catastrophe insurance to be mandatory, right? So I think prior to this, the property insurance was mandatory, right? If you're talking about a business, if you're talking about like personal housing. I'm actually not entirely sure about the personal housing. I don't know if you were in what year would this be? I want to say like Facebook 2018. You see those articles about an American couple who goes to a small town in the middle of Italy, and they buy an apartment for €1,000 or something.
Oh yeah, but then they become inevitably sort of sandbagged with the costs of running the house and
no,
everything
exactly.
like that. Yeah.
I can't imagine a house that old has insurance. So I think I probably do need to dive into this a little bit more. But I recently saw that they actually delayed the implementation of this. So this was supposed to be something passed last year, something that was then put as an obligated piece of insurance as of the start of this year, but they ended up pushing it back. And I assume this has something to do with specific standardization of what that means. What does earthquake insurance mean? Or purely just trying to find capacity on it. But what natural catastrophes hit Italy? There's the flooding events. There's, I guess, land.
I mean, if we're talking about antiquity, obviously there's the big subject of Pompeii, but I'm not sure how active those kind of volcanoes are nowadays.
Yeah. I think that I have a feeling that this will not be a retroactively input insurance. I don't think they're going to pay out the citizens of Pompeii. But I mean, actually, that's a really good point. There was actually in Sicily last year, there was an earthquake that, it wasn't quite Pompeii levels, but there was not an earthquake. What am I saying? There was a volcano that erupted last year somewhere in Sicily. And I know that because my parents had just gone to Sicily the day before. And then I see this article and I was like, oh my God, is everything okay? And they were like, we have no idea. We didn't even know it happened because it wasn't that big of an eruption. But
wait, maybe this is a decent segue because I know that this is obviously not the first time your parents have been quite close to a natural disaster. I remember you talking about, what was it, the 2004 Boxing Day tsunami?
Oh, I mean, yeah. I mean, I was obviously a wee little thing. Wow, what a transition. But yes, we were in Thailand for Christmas in 2004. There was a very, very well-known earthquake, tsunami situation that occurred off the coast, I think in the Indian Ocean, I think it was, because I don't think Thailand was actually, I don't know if it was, yeah, well, it probably was hit pretty damn hard.
Thailand was. I believe Thailand was one of the countries that actually sort of protected Malaysia. Malaysia didn't get
Okay.
touched. We tend not to from these.
All right. I mean, I think that like, yeah. So we to add on to that, I recall, and obviously I was very very young at the time, so this was a story told back to me. But my parents had a decision to make on the day that it occurred, so prior to everything happening, where we were either going off the coast to this island that was pretty much entirely built on like stilts. It was like a fishing island, and like everyone's houses were built on stilts, and we were getting this like cultural tour. Um, or we were supposed to go on this like cave spelunking thing up in the mountains, which I've seen the TikToks, like I don't think I would ever sign up for cave spelunking nowadays. Anywho, and we were going to go to the island, but because there were no availabilities for, a group of five, our whole family to go to the cave spelunking thing. But then morning of my
Cave
dad,
spelunking or the island?
there were no
There were no
availabilities prior to this day for the cave spelunking. But then
okay, I see.
the morning of, the guy my dad talked to called and said someone had canceled. Do you want to go? And he was like, yeah, I mean, we wouldn't have found a time in the following days either. We'll do this thing, right? Let's go do this thing. And I remember we went in. Obviously we're up in the mountains. We don't really know what's going on. We come back out, and someone was just like, you need to call your family right away. And like our phones had, like, not my phone, I was 6, no one was calling me. My parents' phones had completely blown up, and we got back to the hotel. We were in one of the less worse hit areas, right? The buildings were still standing, but like I just have this picture of these two like lion statues that were at the end of this pier going out to the beach, and they had been pushed like hundreds of meters inland and were now at the bottom. Like one of them was at the bottom of this like inland pool. Like there was so much force to push like a couple 100-kilo statue like down a couple 100 meters. And I actually remember, speaking of insurance, my parents became like friends everyone got really close in that experience because they brought everyone up to the restaurant. We all slept on like tent type situations. At some point, some of the other rooms were open, so we moved to a room because women and children first type thing. And I remember that a couple of years later, my parents told me that they actually had a lot of trouble getting their insurance paid out for that because there were so many different damages to take account of, right? It took years and years. And the hotel never really fully recovered, right? In terms, it is up and running again, but I don't think it ever got to the popularity and size that it was because it took so many years. They didn't have a lot of cash. I think it was privately owned. They didn't have a lot of cash to fix everything and then wait for the claim. They had to wait for the claim payout and then try to fix everything. But then there's everyone else is also trying to fix things, right? So costs end up going up and all these different things. Yeah, so big ups on mandatory mandatory nat cat insurance. Is that the moral of the story here?
Yeah, I guess so. I mean, to sort of touch on that earlier point, for a lot of these events, I mean, they are such large scale damages that you're dealing with that it's often impossible for, wholly private enterprise to cover the operations of even facilitating all these claims. So oftentimes when you do get to a scale this size, it does make sense that, governments and regulatory bodies and agencies that do have access to the funds and the operations to do things at scale, that they do become more and more involved. I mean, sort of jumping over to North America, obviously now it's a bit of I suppose a bit more of a contentious issue, but obviously you have FEMA in the US who, plays a tremendous role in terms of dealing with these natural disasters, such as the hurricanes that hit Florida and so on.
Yeah, I mean, I think FEMA has been in the news a lot the last couple of years, right? I mean, I think ever since Katrina, FEMA has kind of had a little bit of a crosshairs on it politically. Now, I'm not American. He's not American. We don't follow that closely. But I definitely know in the last couple of years, there's been a lot of conversation about how FEMA ends up being deployed. One thing that I realized quite recently is that FEMA doesn't actually, when it says that, FEMA's spending 500 million to do something, they're not actually running those operations themselves. They're deploying that to state level or other organizations to run certain operations. And that's typically where, like, when you look at Katrina and what went wrong there, it was a communication problem that ended up occurring because they didn't have the right equipment to be able to relay information around and things like that. Now there's a lot better in, like, technology in terms of satellites and being able to, still have contact with other people, even if, phone lines are down and things like that. But the whole situation in Florida and in California is kind of the elephant in the room, I guess, when it comes to natural catastrophe coverage.
Um, no, I think this is especially relevant sort of where we are now in the market. Of course, we are sort of coming out of this hard market where premiums, well, I suppose before that, we should probably break down the difference between a hard and soft market, maybe.
By all means.
Oh, gosh. Okay, here we go. So a hard market typically refers to a period of time where rates as in premium rates for insurers are rising. So essentially the ratios of the losses on their books versus the amount of revenue that they generate from premiums tends to rise. This is sort of the period where insurers do best. But obviously, like the financial market, these things are often quite cyclical. So we're really coming off the peak at this moment, due to a variety of factors. One huge one being that, the last couple of years have been really quite calm, especially in North America, in terms of substantial hurricanes making landfall. You look at the last couple of years and you compare them to the years where you had sort of Sandy and those and so on, and it's quite the difference.
Yeah, I think the last big one was, I don't actually, this is a little bit random anecdote. Irma, IRMA. So in Danish, that's actually the name of a supermarket chain called Irma. So for me, it's really hard to say it in an English way. But
Wait,
I think that was.
Do you know what? One sec. Pause. Good at that.
I know it's Irma.
Yeah, but there was a single that was 2017, right? So you had 2017 where it was Harvey, Irma, and Maria.
What was 2022?
Ian.
Ian.
Yeah.
He went to a conference and now he's smarter than I am.
Wait, like, okay, random aside, but have you seen those prop betting websites where they bet on the gender of the hurricane? Because oftentimes it's female, but I'm not sure if there's any sort of naming convention to determine whether it be female or male. Like female is only above a certain category or something.
Oh, I mean, yeah. I've
Who
actually,
decides these names?
I'm sure, what is it? NOAA?
The now defunded NOAA.
Yeah, well, isn't that like, what is the NOAA? Yeah, the National Oceanic and Atmospheric Administration. I'm sure they name it. Actually, how are hurricanes? You guys get to listen to us Google things. Because, we don't know it. So it's named by the World Meteorological Organization.
Oh, it's a global entity.
It is. Oh. Names can be retired if they were incredibly devastating.
So we're not going to get another Katrina then?
No, I suspect we're not. It's just a list and they go by order.
Oh,
yeah.
That's somewhat underwhelming.
Yeah, there should be like a raffle. Like in the UK, you see this a lot where like, oh, we got a new train, and then they make a vote, and it's Trainee McTrainface or something, right?
Yeah.
Although I'm not sure I would allow the American public to vote on what the next hurricane should be called. I feel like that's going to get political and perhaps bad taste very quickly. We're getting way off topic here, but there was some news actually when we're talking about these hurricanes. We're talking about these natural catastrophes in the U.S. As some of you may know, if you're listening to this on the day that it's released, in the last week, the U.S. government has gone into shutdown. Right? They could not agree on a budget. They could not renew a budget, and that means that a lot of federal funding disappears. Right? A lot of core services, military, police, things like that. They are still they're still going to be told to work, but there's a lot of services that aren't going to be told to work, and there's a lot of services that are their basis is dependent on the funding coming in, right? So they're kind of they're not like an ongoing. We'll take debt for this. It's is this in the new budget or is it not? So we were just talking about the NOAA. That is probably something where the employees are not going to be getting paid. I'm not entirely sure if they're mandated or not. I didn't look in that specific capacity, but a couple of years ago, the U.S. Budget included something called the National Flood Insurance Program, and that goes back to what we were talking about before in terms of the government playing a role in providing insurance or being able to be a backstop within insurance. And this is actually something that's supported by FEMA. This is one of the ways that they use the money that they're getting. And National Flood Insurance, or the article, if you are watching on YouTube, we'll throw it on the screen. The article that I saw here was specifically about it not being renewed because no budget. And the problem is that the way insurance works is that it's very typically based on other insurance, right? So you'll get one piece of insurance and it will say this insurance is only valid if you have another piece of insurance, right? So that may be, if we go to a business, for example, you must couple your property with a liability, right? Like, yes, something could happen to your building, but something could also happen to the people inside your building, or something could go wrong with your building, like your roof cracks or whatever, and it could land on someone, right? So you need liability. And then sometimes there's health insurance, right? Like your company, and this is going to sound foreign to US people, but your government may have one type of insurance that gives healthcare. And your company may provide supplemental healthcare that like says that, okay, we will do everything excess of that, right? For example, when I was in Canada, that's how my dentistry works, right? So the Canadian government has health insurance, and my dentist was paid by my excess company health insurance. And this kind of continues in contracts, and it continues on like insurance based on insurance. But the big thing I saw regarding this flood insurance thing is that you cannot buy, sell, or rent a house when this insurance is not there, because you cannot get insurance to buy it. They're all based on the fact that you have the National Flood Insurance Program. So until the wordings get changed, and they're not going to change all the policies retroactively, they're not going to, they might renew you with that change, but they're going to wait and see what happens, right? They're not going to just change everything on a dime, and then, you manage to sneak in, flood insurance comes back, and you don't actually have flood insurance, and you got a different premium, right? Or they're going to have to start pricing in the fact that you don't have national flood insurance, right? Because all of a sudden the risk is a lot higher that they have to pay something out. And I think that this kind of goes. This is different from state to state, because I think this is obviously a national program, but I think the article I saw was specifically Texas. And now we're starting to get into state by state issues, right? How does Florida deal with insurance? How does
It's a slippery slope.
It's such a slippery slope. It's such a slippery slope.
Yeah, but I think maybe we should try to maybe we should go into perhaps the structure of these natural catastrophe insurance policies and how they're sort of put together, and more importantly, how they should be paid out.
I don't have the answer to that.
You're the insurance guy.
Wait, like how they're put together in what sense?
In terms of the factors that go into pricing natural catastrophe.
If we talk about claims and pricing every single time, it is different, obviously, from coverage to coverage. But actuarial models, in regardless of what's actually being insured, it's primarily historical data, right? So, for example, when they're looking at Hurricane Ian, the one that happened in 2022, they were looking at Hurricane Irma in 2017 and seeing the damages and the results that were expected from that, right? And then they look about, okay, what's the frequency of these things, right? If I'm going to pay a claim next year or every 2-3 years, when am I going to have to pay a claim again after that? and what's the chance that the damage is going to be as high. One of the more interesting things that we can see when we're looking at, going back early 2000s, more recently 2017, 2022, is the role that reinsurance then plays in these natural catastrophe ones. Because if you go on any insurance, publication nowadays, the conversation around NatCat 5, 6 years ago was, holy crap, these claims are getting huge, right? We're paying out a lot. Now what we're seeing is more, when we're looking at NatCat, is more of a conversation from reinsurers. So reinsurers are the ones who they will take, an insurance company will have a big portfolio of insurance um, policies, and they'll go to reinsurance and say, hey, can you take some of the risk off me, right? You can risk transfer the risk transfer. But now the reinsurance are saying, we're not going to be taking as big of a pie when it comes to natural catastrophe, right? They're now changing their policy to hope to get behavioral change within the insurance companies on how they insure things. And that has led to what we've seen in Florida, we've seen in California, of uninsurable risks.
Yeah, yeah.
Or was there something else that you had in mind?
No, I was just thinking sort of maybe more broadly in terms of, what goes into the pricing and how, these actuarial models actually gather data in order to predict future rates of hurricanes making landfall in Florida, for example. With agencies like the NOAA having become somewhat defunded, does that impact the actuaries' ability to therefore be able to have the data that they need to predict future events?
So, I mean, the good, or the not the good thing. I was going to say there's good things about claims, but the main thing about the claims process is that there is like an investigative period, right? So they're while they're looking at claims, they're collecting the data around those claims, right? So they're looking at, okay, what did the actual aerial model say when we actually priced this risk, and what did we actually recognize afterwards? Well, how do we consolidate? How do we get to a middle ground in terms of what we thought was going to happen and what happened? And then it's kind of this like back and forth. How do we adjust the models a little bit? There is a lot of public source, like publicly available information, right? Like government satellites, free market information. But there's a lot of tech, insurtech companies out there that are primarily based around the concept of how can we provide supplemental information, right? There is this idea that with enough information, you can price something more accurately, right? Because a lot of people, you go get a quote for insurance and you'll think, okay, I got 4 different quotes here and they're all fighting against each other for this specific piece of business. But they're actually fighting against each other in the long run, right? They're thinking like there's this idea that if you can get the perfect actuarial model and you can perfectly price something so you're profitable, but you're also being competitive, then long run, you're going to be better than all the other insurance companies in your ability to place business. But I think that the amount of variables and inputs, they change, right? There's new sources of information. And how do you consolidate the fact that the NOAA maybe aren't as good or well equipped, right? That may not have an impact today, but 5 years from now, if they're not keeping up with maintenance on their satellites, if they're not keeping up with like brand new technologies, there's going to come third-party solutions that can give a better weather-based insight than the NOAA could. And then these different actuarial models need to take into account, well, how do we reconcile that with the data that we've already collected? And how do we then move forward with this?
So, how does that sort of factor into the decision making of insurers? I mean, like you said, if this new sort of environment that we're going into, where perhaps governmental bodies play a lesser role in terms of providing the data that you need for the actuarials, um, does that become sort of another barrier to entry for smaller players, perhaps, in terms of getting these models as accurate as possible?
I think nowadays there are a lot of insurtechs out there that will help you build your base model, right? So there are now software providers out there that have their own data banks, their own data dictionaries, their own thesaurus of information that can give you a starting point to go off of, right? So in that sense, it's not as easy for you to build up your own model from the ground up, but there are very few companies that enter the market and do that, right? They will take a model or an actuarial model that exists, they'll work with a firm, and then they fine tune it to their specific thesis or their specific understanding, right? Like perhaps I was an underwriter, in the Florida space for years, and the models may not have picked up on this, but I've actually recognized that if there's a lagoon or like, what are they called? Those like Florida lagoons? They have some like cool name.
Um, Mangroves.
Not the word I was thinking of, but I'll take it. So there's these like, well, actually, that's a perfect example. That's actually a perfect example because I once watched a nature documentary on this. And
Oh, is this about how they provide sort of a natural
exactly
barrier for flooding? Yeah.
they flood break Everglades. Thank you, Harsh. The Everglades.
Jamie, pull that up.
Yeah. The Everglades, they have these. It's actually both of these answers are exactly what I was looking for. The Everglades have these mangroves, right? So let's say there's one underwriter who understands, okay, well, if there's a good population of mangroves, like there's a healthy mangrove, density around these buildings, the flood damage isn't actually going to be as high. So then he thinks, okay, well, I can actually outcompete all these other, insurance companies out here because they're being like, oh, it's Florida, really, really high risk. I can actually go and say, you know what, I'm going to give a lower premium to the buildings close to mangroves, and then I'll be able to compete in that specific segment. So I'll take a generalistic actuarial model. I'll plug in the data about proximity to mangroves. I'll look at some, I don't know where you get nature data from in the US, but I'll go to some, maybe there's a government agency, maybe there's like nonprofits and things in the area that like talk about mangrove health and density and things like that. And I'll plug that in and that'll be able to give me a different price from everyone else. Right. And then in some places, I like the Keys, maybe I'll be charging far, far more than everyone else because there's no mangroves. But then where there are mangroves, my price is going to go down, and that's how I can enter as a new player and have that kind of like competitive edge there.
Right. No, that makes a lot of sense. And I suppose it is somewhat about finding these certain traits about, parties that you're looking to secure business from, and the risks that you want to ensure that differentiate them from the rest of the market in terms of, the size of the claims that they might be making, and obviously the frequency.
Yeah.
And that kind of brings me to maybe the next thing we should talk about, which is, so obviously we've kind of touched upon sort of hurricanes in Florida, which is, a growing topic of interest. And, it's an event where you're seeing them maybe on average once every 2 years in terms of a substantial one where there's millions and millions of dollars in terms of claims. How does the approach from perhaps an environment like this differ to something on the West Coast, where the question isn't so much about, frequent annual hurricanes that are making landfall, but you have not only forest fires, but obviously the topic of the big one, the big earthquake, that everyone on the West Coast has been waiting for God knows how long.
Yeah. I mean, I don't think I think we kind of talked a little bit about the earthquake piece, so I'll focus on the fire piece. But just to wrap up the earthquake piece, I mean, I can imagine, let's say you've been in California for the last 30 years and you've been playing earthquake insurance every month for the last 30 years. You're probably getting a little bit fucking tired of paying earthquake insurance, right? Like, just come on already, right? Like, hit me.
But like,
for context, our battery on our camera ran out. I had just thanked Harsh, and then it decided to no. And we were just talking about the differences in earthquake insurance when we're looking at something like Japan and we're looking at something like California, where the frequency is far different. But I think what's really I am actually going to put a because I think we're approaching a time where we don't want to ramble on for too long. I think I will put a pin on the earthquake like difference when we're talking about frequency, purely because the events that we're looking at in California is going to also affect Japan, and there's a lot more to consider at that point because it is a ring of fire type thing, the Great Fault Line, all these kinds of things. That is a once in a 10,000 year type event. There's probably a word for it, once in a millennium type event, but something that is driving.
Sorry, just before we wrap up there, because now it's got my brain going.
Okay, you know what? We'll do it. This one will be slightly longer. This one will be slightly longer. Let's hear the thoughts.
No, so like, obviously in Japan, I hate to go back to Japan, but like, I mean, not really. It's a lovely place, but in terms of the damages that an earthquake causes there, there's a general understanding of what that range looks like because it happens so frequently. This big one that's being expected on the west coast of the US, there's no sort of historical data to even provide a bit of insight in terms of business interruption, total property losses. At the end of the day, there's no way the entire loss of this big one and the resultant sort of fallout will be completely covered by insurance. So
Yeah.
are there sort of limits that sort of come into play here?
Well, I think the like events of that type of nature, of that type of scale, I have a feeling are a little bit. I think the general idea here is that if we really hit the fan that hard, the government will come in, even if there's no policy to do so, right? Because like we're talking about like mass bankruptcy type events, right? Like we could there's actually other examples of this. A solar flare.
Actually, yeah, sorry, just on that. I guess it would be somewhat similar to what we saw, not in this administration, but in the previous one, where you had, I believe it was Signature Bank and Silvergate in the US. And so, for those unaware, these were sort of banks that found themselves unable to pay out their deposits. They also happened to be banks that had a lot of deposits from tech startups from Silicon Valley. So you can imagine just what the average size of a deposit current or checking account was there, and it far exceeded FDIC insurance, what their deposits should have been covered for. And I think what happened in that case was that the US government under Biden actually came in and allowed for total sort of claims for the deposits lost.
Yeah, and I think that's generally the expectation when there are true black swan events. If we mentioned last time, I think that's kind of the expectation that the government will come in and they will support these insane black swan events. Now, that doesn't mean that there isn't earthquake insurance in California. There are people paying for earthquake insurance, and you will probably have a better time come an earthquake with earthquake insurance than waiting for the government to maybe or maybe not come in. I'm not so sure the current administration would readily available to come in and help California if the earthquake happened now. Um, but I think that right now, the reason why we keep bringing up Florida and California is because they're both currently experiencing this uninsurable risk status in terms of there's a lot of, because the U.S. works on what's called admitted insurance. So each insurance company is admitted on a state by state level to provide insurance. We've seen a lot of articles of insurance companies exiting those markets because there's no point in them paying for operations. They can't turn a profitability because of the high chance of risk and because of the high claims payouts that are occurring here. So in Florida, that's because of the hurricanes, that's because of the flooding, that's because of the damage that follows them. In California, it's not the earthquakes that are driving insurance companies out; it's the wildfires that are driving the earthquakes out. I mean, and if when we lived in BC, there were wildfires that happened in British Columbia as well, and
every summer.
yeah, and you could see the smoke, right? The smoke would travel when there was a wildfire, in northern BC, or if there was a wildfire in California. These are massive, massive events. And was it last summer or was it last summer? Was that LA or something? There was like where I remember there was these it hit like a very wealthy part of the
Yeah, that was last summer.
yeah.
I believe it was the Palisades.
Yeah,
that
yeah,
went through.
exactly. And I mean that obviously wildfires on their own have huge impacts. What was that city or town, I would say, in BC that got entirely swallowed up by a fire? There came a huge gust of wind that pushed a wildfire like over a freeway and just through a city. Can you quickly search that actually? And this is the type of risk that I remember when I was younger, we would there's these conversations about controlled burns, and in California, those like fire lookout towers are iconic in terms. Lytton, BC, yeah,
Yeah,
the
yeah.
entire city burnt up because of a huge gust of wind came while a wildfire was going on, and it invoked the flames in a completely different direction. Luckily, everyone was evacuated. I don't actually think I don't want to comment on it, but there was probably minimal human damages actually, because BC does have a very active a firefighting culture.
Yeah, actually, somewhat related. I've met a couple of the guys that go on the, these firefighters who hop in the helicopters to try to divert the flames from towns and cities and so on. It's crazy the work that they do. I mean, during the summer, they are just absolutely occupied. Every day is a new fire and trying to put something new out. And you can see that it definitely takes a special kind of person to get into that.
Yeah.
But I mean, just in terms of outlook, just talking to these guys, they're seeing year-on-year increases of both severity and frequency of these fires.
Yeah, but it's even like when big enough fires occur. I remember seeing articles that like wildfire firefighters from BC and Mexico were flown into California to support. And there's this, I don't remember the name of the TV show, but there's actually an American TV show about like a prison gang that does like firefighting, right? Like they actually, I'm not going to dive into that because the context of that is, in my opinion, what a weird context. But like there are just there I don't know if there are the resources or the strategies to properly combat wildfires in a way that won't, at least every couple of years, we have a big wildfire. And that's exactly what the insurance companies probably concluded when they decided that we cannot insure these things. And I think we are kind of getting to a point where we need to slowly wrap this up. But as a segue for the kind of the next episode, as Marshall Mathers would say, the next episode will probably be around something called excess and surplus lines.
Yep.
And these concepts that we've been talking about today, this prevalence of natural catastrophe, there's a couple things that we weren't able to touch on, and I'll kind of throw those in probably in some future episode, being like, I really wanted to talk about this, but it won't be today. But next episode, we will be talking about excess and surplus lines, which is a non-admitted type insurance. Works a little bit differently. You'll have to stick around next time to hear us dive into it, but is very, very well connected to this natural catastrophe conversation we've been having.
And I probably would say one of the fastest growing sectors in insurance globally. So stay tuned.
Yeah. All right. Well, really appreciate it. And we'll catch you next time.
Is that really our outro? This has been Casper and Mo.
Okay. This has been Casper Harse and
Mo Mirzon.
And we finish each other's sentences. Thank you very much.
That was worse. This has been the Coverage and Coffee podcast.
This has been the Coverage and Coffee podcast.